Did you hear Becky Not Too Quick talking to Joe Bag of Donuts this morning? Joe, Goldman Sachs downgraded Aapl this morning. Really, Becky? To what price? $145. Oh boy. Is Aapl a buy today? Come on. Folks, I haven't seen them in months. I had to tune in for that. The Contrarians News Bubble Channel, Cnbc. What a hoot. Isn't that absurd? Let me show you something. I'm back at Don at StockMarketCaddy.com. It's January 3rd, about 6:20. We've been up for a couple of hours. Those guys, they were riding in their limo from New Jersey and, in the green room, getting their hair done, getting the makeup on, reading the front page of the Wall Street Journal. Then they come on and repeat the same old crap, or the talking points they get from Goldman Sachs. And notice all the stock pimps, right? Did any of them ever issue a sell signal in the last 3 months? No, they downgrade after the fact. Aapl trading at $144. Thank you, Goldman Sachs, for the time we downgrade, as I get an 8.8% haircut after already being down. Where were they when the thing was over $200 or higher? How long have we been short? 40 days. 100 shares short at 207 on November 2nd, and you could have saved yourself $5,000. No, we will not be on CNBC. Let me just offer one. By the way, let me show you our trade purse. This is our trade purse for the S&P 500. Want to know how we're positioned? Just slow this video down, but we're either, short, mostly short. Look at all the green. If you had taken 100 shares, forget about taking it short. Maybe you took 100 shares out from your 1,000 share position. This is how much money you would have saved. You see this? On Aapl, let me explain something. When Aapl started coming out, moving, remember they were with the iPod and then moving into the first iPhone? That was when Obama was just coming into office and the economy truly was sucking wind. See, out of 500 stocks were profitable, either flat or profitable out of 450. When he came into office, shortly after he came into office in 2008, they made an accounting change for Aapl. What was that accounting change? See, nobody bought a phone for $1,000. What do you mean, bagger? Everybody bought an iPhone. No, everybody didn't buy an iPhone. Nobody opened up their checkbook and bought an iPhone. It was subsidized through the carriers as an inducement. You got a discount, so you can get the new iPhone for just $300 if you sign up through Verizon. Oh, you can get it for $275 if you get it through AT&T. And then they would pay the difference. Well, what's wrong with that, bagger? Well, a couple of things. One, the consumer wasn't really buying it. It was subsidized. The phone companies wanted the contract. And then number two, when they first started doing that, the accounting rules were that Aapl could account for 25% of the purchase price in the first year. And then if it was a 4-year contract, the remaining 25, 25, 25 over the life of the contract. Well, the Obama administration made a sweetheart deal, accounting change and approval, that Aapl could take the revenue forward, basically mortgage it forward. Well, that was a win-win, right? You bring the revenue forward by 4 years, and then you come out with the iPhone 2, the iPhone 3, the iPhone 5. What are we up to? iPhone 20 or something? That game has been played out. It's been played out so much that the carriers, they're not subsidizing it anymore. They're not subsidizing it anymore. And guess what? Consumers, they didn't want to spend $1,000 in '08. They don't want to spend $1,000 now. And why are the carriers, not bothering? Because basically everyone's got like 5 of these darn things. Not me. Nope, I got a little flip phone. Everyone's been tapped. So they mortgaged it all forward. So that's why Apple's coming down. They mortgaged the future, and now comes the catch up. Not in Heinz 57, as in stock price at Let's go look at it again. Aapl 143.95. You want an idea where it's going? Let me show you. Okay, this is a site that we will frequently, reference. I got some very nice tools at stockcharts.com. By the way, if you go back and look at our YouTube videos from like 2008, we told everybody this back then. Oh, you're crazy, bagger. You're crazy. What does he know? That's what they would say. And I'm like, all right. So here's Aapl. Oh, look at this. You know how they always talk about the golden cross, the 50 over the 200? Look at this. What's that? That's the death cross. Look where the price is, though. This is up here at 192. See, you never get the cross, right? People will go back in time. If you just sold right there. Well, if you just sold right there, you're down here at 145. Why? Because, it's the 50 over the 200. I mean, you're 200 days too late. But it's going lower. Trust me on this. This is an A to B. Aapl in another 6 months will be below, if not sooner, 100. If you knew how to use point and figure, the first sell signal was right here at 213. There was a sell 211, 203. Here's another one at 197. This one definitely at 184. And then at 170, then at 161, here's 161. Just keep buying the dip, and just everything you made up over here, if you average down, which is what they preach on Cnbc, you will lose everything that you gained twice as fast. This stock is dead. Dead news. And it's not Trump. And it's not the China consumer. They mortgaged the future. This stock is going below 100, if not, much considerably lower. And it's going to take like 5 years, and probably, Steve Jobs coming back from where he is to re-energize this company. This stock is going down. And, we will not be buying the dips. I mean, we'll be trading it. But if you hope this thing, for this thing to regain its uptrend, it's got to get above 197. I'm Bag of Don, StockMarketCaddy.com. If you think our subscription is expensive, if you think we're all wet, take a look at what we've said in the past, and then ask yourself, did my broker ever tell me about that? Did Cnbc ever tell me to sell Aapl? There's a lot more of this, folks. This charade, and they want to whine and cry. Oh, the Federal Reserve is taking out $150 billion a month. Well, they pumped in hundreds of billions for 10 years. Remember, we're creating a wealth effect. A wealth effect. Think about that. A wealth effect. Not real wealth. No. The only thing that's real is the debt. See, they made everybody feel richer than they were. That's called a wealth effect. The suckers aren't really that wealthy, but they think they are. So they're going to go out and they're going to buy these phones and sign up on a contract and buy a car and buy the timeshare and send all their kids to Cornell for, $80,000 a year for a degree in theater. I'm bagging on stockmarketcaddy.com. $99 a month for some common sense in the markets. A very rare commodity.